¿Cómo sería si una universidad se preocupara por sus estudiantes de la misma manera que las enfermeras cuidan de sus pacientes? ¿Qué pasaría? Algo extraordinario pasaría. Acompáñanos. Chamberlain University College of Nursing. Cuidado extraordinario, enfermeras extraordinarias.
Attend an open house at the Phoenix campus November 15th, anytime between 5 and 7 p.m. Register now at chamberlain.edu.
If you don't want to hear real facts on social and political issues, then stop listening now. Otherwise, stay right here for real issues, real facts with real people.
Accelerate your culturalization of America.
But when the Dems use the argument that we're all immigrants, I want to turn into the Tasmanian devil with 2 clubs in Miami, clear the road. There were immigrants that came here because they wanted to be here. They wanted to learn the American. They wanted the American dream. You cannot get the American dream speaking Spanish.
Fat, drunk, and stupid is no way to go through life, son.
I'm going to deal with topics and issues that will make you think, make you mad, maybe even get you a little embarrassed. Don't go anywhere. The lines are open. You can reach me at 855-REAL-JOE, 855-732-5563.
You're all so stupid. It is you take lessons.
You're despicable.
Welcome to another session of Standards, right here with the real side. Always a pleasure to have you here. I appreciate the time that you're spending with me on the air, in the chat room, texting, tweeting, and being part of the conversation. 855-REAL-JOE, 855-732-5563. And I really do appreciate I know there's like 3,000 other shows out there today you could be listening to, but you've chosen this one on this station, and I very much appreciate it. I also think it shows what a high IQ you have, so I got to give you credit there, too, as well. Again, I am Joe Messina, your host, and again, I do so much appreciate the time that you're spending with us. You got to get informed, and you have to get engaged. And what I mean by that is that it's not a matter of just sitting there and listening, right? I mean, it's not a matter of just sitting there and listening and taking it all in. How do you engage? How do you get the message out to somebody else? What are you doing to bring the message for people to understand what's going on in and around the world, what they have to do to fix it? I'm still amazed at how many people, look, we just did that story about Al Gore. And most young people, most Democrats, most people that are, left-leaning ideologues, they're going to tell you flat out that, Al is a ecological god. He cares about the world. He cares about the planet. He's willing to do anything. And they look at great sacrifice. Look what he's doing. Right? Look what he's doing to save. I don't know what Earth he's saving. You just saw what he's using. You just saw the amount of damage that he's doing on his own. I love it. Who's going to call him out, though? Who on the left is going to nail him and call him out? That would be my question. Again, 855-REAL-JOE, 855-732-5563. The recent story at Town Hall is about a Christian school deciding not to do Christian education, which I am just always amazed at. I'm always amazed at Christian schools that back down from their belief system because they don't want to offend anybody. They want to be broad-based and bring in who they could. Apparently, they'd never read any of the Gospels in the Bible. Jesus was offending people all over the place. He was calling people names. And you wouldn't think he was a quiet man? I don't know. You think he quietly tore up the temple, right? The merchant area of the temple? Was that a quiet? You think when he was yelling at the Sadducees and Pharisees and calling them hypocrites and such, you think he did it? You think he went, hey, yeah, Sadducees, Pharisees, come here, I got to tell you something. No. They were standing up on that area around the temple, and he was yelling at them. You hypocrites. Wow. Sounds like a easy pushover to me. What do you think? So the story was written by Mike Adams over at Town Hall. And Mike says that, it's the end of the summer during there. It occurred to me that I have spent most of it working on 4 college cases dealing with either the freedom of speech or freedom of association. He said one of the cases involves unconstitutional viewpoint discrimination in the dissemination of student fees at public university in California. Another involves unconstitutional interference with the belief requirements of a religious organization at a public university in Colorado. But the other two cases deal with administrators at private schools that claim to be Christian while simultaneously destroying the careers and lives of people who hold dissenting but entirely reasonable views. Intellectual honesty dictates that I use my platform to deal with these Christian dictators. I see it all the time on the show. Stories we do on a regular basis where Christian schools try to keep professors from teaching Christian doctrine. That's Joe's input. Now, he goes on to say that no one should be surprised that Duke Divinity School, DDS, is one of the institutions claiming to be dedicated to uplifting Christ while organizing lynch mobs to destroy the lives of those with dissenting viewpoints. After all, Duke is a university where 88 professors tried and convicted a group of innocent athletes in court of public opinion for rape that never actually occurred. Remember that? Sharpton was all over that. That was even after the athletes were found innocent, the unrepentant 88 continued the witch hunt to figure out the students that deserved to be destroyed anyway. Right? Simply for inheriting their white privilege. You see how hard this gets, how bad this gets, how life-destroying this can become? Right? Think about it. You know, again, a Christian school. Now, I'm not saying that they're just supposed to wave a wand without knowing the facts and forgive these guys. That's not the point here. But what's funny is they were innocent. They were found innocent, and a Christian school is still looking away for hanging them. And if you're paying money to that school, if you're an alumni of that school, you're giving them money, shame on you. If you're a Christian giving money to that school, shame on you. You know, you're supposed to be a good steward of your money. Are you a good steward of your money to give your money to an organization that claims to represent your Lord and Savior, but yet openly works 180% on the other side of his promises or his rules? DDS professor Paul Griffin, when he received an invitation to attend a radical indoctrination program put on by the left-wing Racial Equality Institute, REI, he decided to decline the invitation while offering his criticism of the program. And that was it for him. He was done then. Anyway, I'm Joe Messina, your host. I'll finish this up later on. When we come back, we're going to have David Fisher with us. We'll be right back.
Did you know that 9 countries around the world have already seized their citizens' assets to pay down their country's debt or support their banking system, known as what we call a bail-in? Did you know that bonds, mutual funds, and cash can be easily seized, while certain types of gold and silver coins historically are protected from government confiscation? Would you like to know the laws that have been passed to seize your wealth and how to protect your hard-earned money? Did you know that the Dodd-Frank Act allows our government to do the same type of seizure on our investments that those other 9 countries have already done with their citizens? If you don't want the government to seize your assets, you need to know how to protect yourself. You need to call our friends at Landmark Capital today. They are waging war against the government seizure of your wealth. Call 855-747-5947. That's 855-747-5947 to get free info or landmarkgold.com.
Everyone loves liberty. Our rights come from God, not from the government. So why are you letting other people tell you what's best for your health care? Joe Messina here, host of the Real Side Radio Show. I'm asking you to exercise your freedom with Liberty Health Share. Liberty Health Share is a community of people who voluntarily share one another's medical costs. Liberty Health Share is founded on the idea that most people truly want to help one another. Healthcare sharing allows members to do just that as a true community that support one another in times of need. Liberty believes people should make decisions for themselves and their families. Members are able to take back the freedom to make their own decisions about their health care. Freedom from guilt or doubt about how your money is used. You have the freedom to direct your health care, not to be dictated by bureaucrats. Stop letting others tell you what to do and join a community of like-minded people. Exercise your freedom. Join Liberty Health Share and take back the control of your health care while helping those around you. Call us at 855-58-LIBERTY. That's 855-58-LIBERTY for more information, or check us online at libertyhealthshare.org. That's libertyhealthshare.org.
J&M Enterprises is a full-service screen printing company. They print on shirts, pants, hats, cups, frisbees, sports bags, sweatshirts, tote bags, and most any other promotional items. J&M has been family-owned and operated for over 25 years. J&M takes pride in providing high-quality products and services because we care. Our state-of-the-art equipment enables us to print high volume with superior quality on any job. We print on clothing lines for schools, businesses, sports teams, and bands nationwide. Our team is committed to total customer satisfaction and the quality you should expect from a professional screen printing company. J&M, family owned and operated. Give us a call. We guarantee a great product and a great price. 800-462-0002. For a price quote, 800-468-0002. Or go to the web at www.jnm.cc.
Hunters, anglers, campers, and survivalists. Get back to nature. Expand your horizons with the highest quality, most versatile, unique slingshots and sling bows on the market at slingbow.com. Sling bow products are compact and models start from just $17.98. They're perfect for your bug out bag or storing in your vehicle. Give yourself and your loved ones the excitement and tradition of sling bow, a new frontier in archery and truly modern twist on this primitive survival tool. Feel the thrill only at slingbow.com.
Did you ever go to school, stupid? Yes, sir. And I come out the same way.
Seems everything I buy these days has got a foreign name. From the kind of car I drive to my video game, I got a nighttime camera, a Sony color TV.
We are back. You're listening to The Real Side. Always a pleasure to have you with me, and I do appreciate it. You know what? You have to be American-made. I hope you have American-made stuff from that. I know you can't have everything American-made, but I think we ought to go out of our way to help make sure that we look for American-made. We promote American-made because you know what? It's important that we keep Americans working. Really, seriously. I'm a nationalist in that light for sure. Anyway, David Fisher is going to join us, and you know, as I said before, I love having this guy on. David Fisher, CEO of Landmark Capital, joins me every week to give us an idea of what's going on with your money. You know, I titled today's show, or this segment, you know, do you have money? Why not? Seriously. I mean, in today's world and looking what's going on around us, you need to really have a plan or understand or be able to take care of your family. Should things go sideways? And I'm blessed to live in a little area where, you know, the housing market's doing well and life as a whole is doing well. But it's not going to take long before what's going on around us starts to infiltrate or affect us here. So I like bringing David on. He gives us an idea of what's going on today in the world of finance. David, thanks as usual for being with me.
Absolutely. Thanks for having me.
You know, and people don't realize how much the markets across the world affect them on a daily basis. But right now, there's a celebration going on because the Dow surpassed 22,000 points for the first time, but we couldn't get the health. Oh God! Don't get me started on that. That'd be 3 hours. We couldn't get the health care bill passed, you know, and the markets just don't. Do they not need repeal and replacement of Obamacare? I mean, I thought that was a big deal to those in that world.
Well, you know, obviously the market has gone up since we've had several failed attempts at repealing, replacing Obamacare, or doing anything, just even repealing it. So the market is saying it does not need that. But I think here the bigger question lies within is what is really driving the market then? Is it the anticipation that they're going to get tax overhaul done? Is it the anticipation they're going to get a great budget and spend less? I don't even know if the market is moving on those anticipations of those things happening anymore, because if it was, the Dow wouldn't have broke a historical high of 22,000 points this morning. It's down a little bit off that. Now it's in the $21,990 point, 990 point.
Easy for you to say. Yeah, I know.
Yeah, I put it to dollars as points. Sorry. So my take on it is this. We've had so much regulation in the last 8 years put upon businesses, Wall Street, banks under the Obama administration, and one by one, what President Trump campaigned upon is he's going to deregulate the industry where businesses are affected through government regulation. And he's been doing this one by one through his pen and paper and also passing legislation. And now we're seeing the benefits of that. So a lot of this, I'm going to give Trump credit where he deserves credit. And a lot of this is happening just because we have a pro-business agenda president in office, and he's doing what he said he would be elected upon. Obviously, a lot of these major things like Obamacare, repeal and replace, haven't happened. I think it still is going to get revisited, but the market has not been anticipating that it was going to get passed. So therefore, when it failed, the market didn't go down, but we still have a pro-business agenda platform. But the problem with the market right now is it's very thinly, narrowly traded. Only a few stocks, Joe, are actually causing the market to go up. Today, being evidence, Apple was according to CNBC this morning, said if it wasn't for Apple and this earnings that they reported recently, the Dow would be down. So Apple carried the Dow to an all-time high.
David, that's not good though, right? I mean, when you have
no, that's a terrible thing. That defies fundamentals. When the Dow, there's 30 stocks representing the Dow index that comprises the index that represents 1,000 stocks in the Dow, and one stock is leading the charge and carrying the whole index. That's terrible. That says a couple things. One, where's the investors, which brings up the next segment of this portion of why the Dow is going higher. The Dow is going higher because traders are causing the Dow to go higher, and professionals in the financials are causing the Dow to go higher. But it's very narrowly traded, which is not a good thing, because when people decide that Apple can't make money next quarter or the quarter after, and they're shrinking in their international presence, unfortunately Apple is, when they can't sustain that, the Dow is going to correct or look for the next stock that will carry the Dow higher.
I'm still stuck on the fact that, how many companies are in the Dow? Do you know?
There's 1,000 companies in the Dow.
So 1,000 companies, and you're telling me that as of late, probably less than 10 companies are driving what the market looks like.
Yes, most of the tech companies in the Dow, and the Dow's not even a tech index.
That's NASDAQ, right?
That's the NASDAQ.
See, exactly. I know something, David. I learned something from you over the years here.
So what's happening is, here's Apple is leading the charge. Boeing is behind them. McDonald's. So these major big companies are moving the Dow.
Wow.
So, but if you look at a healthy economy, you can't have a healthy economy unless it's broad-based. You can't just have a handful of the big, what we call the big box stores or the big corporations leading the charge and saying that is equal to a synonymous of having a healthy economy. A healthy economy is broad-based. We're very narrow-based, and this is why it's very misleading right now and what's happening in the stock market.
Wow.
I love the stock market. I'm not anti-stocks, but it has to operate on fundamentals, and that's what people are coming out now saying. It's, this thing is in a bubble. It's going to burst at some point, and it's going to be pretty severe the longer it goes on in this bubble. But Trump's, taking all the credit for it. And he should in some ways, but I would not want to marry myself to this, because when the bubble happens, he's married to the downward side of it too.
Listen, I joked about it on the show the other night. I said, look, interesting how Mr. Obama, when things were on the negative, I think he blamed Bush for 5 years after he was president. So, Trump coming in now, I don't know what the market means. I don't, and he seems to be, flip-flopping on some of his economic processes or promises or what he was looking at. Am I off?
No, there's three things currently just today that he's flip-flopping on, today and yesterday. And one is the dollar, one is Janet Yellen, the Fed, and the other one is tax cuts versus tax reform. Specifically, in the beginning of the year, and while he was running for president, he was banging the drum saying we got to have a strong dollar, telling journalists how powerful the U.S. currency should be, and that's what he wants. On November 8th, the dollar quickly jumped. November 8th last year, the dollar jumped in its index about 6.5% to its peak. Then, shortly after elections, Joe, the dollar's been moving down.
You know, you want to hear he's got more on the other side of the break. I'm Joe Messina, your host. David Fisher, CEO of Landmark Capital, will be with us on the other side. Don't go far. We'll be right back. Become a member at Liberty Health Share. Members are exempt from tax penalty and mandates slapped on individuals who don't have health care insurance, giving you real freedom from traditional insurance. I'm Joe Messina, host of the Real Side Radio Show. Liberty Health Share gives their members real control by giving them the freedom to choose any doctor or hospital anywhere in the nation, for real.
J&M Enterprises is a full-service screen printing company. They print on shirts, pants, hats, cups, frisbees, sports bags, sweatshirts, tote bags, and most any other promotional items. J&M has been family-owned and operated for over 25 years. J&M takes pride in providing high-quality products and services because we care. Our state-of-the-art equipment enables us to print high volume with superior quality on any job. We print on clothing lines for schools, businesses, sports teams, and bands nationwide. Our team is committed to total customer satisfaction and the quality you should expect from a professional screen printing company. J&M, family owned and operated. Give us a call. We guarantee a great product and a great price. 800-462-0002. For a price quote, 800-468-0002. Or go to the web at www.jnm.cc.
Did you know that 9 countries around the world have already seized their citizens' assets to pay down their country's debt or support their banking system, known as what we call a bail-in? Did you know that bonds, mutual funds, and cash can be easily seized, while certain types of gold and silver coins historically are protected from government confiscation? Would you like to know the laws that have been passed to seize your wealth and how to protect your hard-earned money? Did you know that the Dodd-Frank Act allows our government to do the same type of seizure on our investments that those other 9 countries have already done with their citizens? If you don't want the government to seize your assets, you need to know how to protect yourself. You need to call our friends at Landmark Capital today. They are waging war against the government seizure of your wealth. Call 855-747-5947. That's 855-747-5947 to get free info or landmarkgold.com.
You want to continue to be one of those uninformed voters, uninformed people in this world? Then change the channel, because they're going to give you information you can work with. I'm going to give you information that's going to make you have to make a decision, have to do something about what's going on in this country today. If you want to get involved in the conversation, 855-REAL-JOE, 855-732-5563. Hop on the website, therealside.com, where you can get involved in the live chat, the watch live, the listen live, take the latest poll, check out my classic podcast. There's so much going on the website. Buy my book, Ramblings of a Right-Wing Bible-Thumping White Guy. We have shirts up there, #stand. It'll help you show others that you're willing to stand for liberty, stand for freedom, stand for these United States. You know, that's how we stay around. Do something. Get involved. The lines are open, 855-REAL-JOE, 855-732-5563. Go to the website, become one of my PIPs, my politically incorrect posse members. That's right. For the cost of a cup of coffee, that very expensive coffee place, you can go ahead and be a member of the team. So keep it here. Remember, get informed, get involved. Don't go anywhere. You're listening to The Real Side on GCN Live, and we'll be back in just a couple of minutes.
Please answer the question.
We are back. listen to The Real Side on C-SPAN Live. Always a pleasure to have you with me. I appreciate the time you spend with me on the air, in the chat room, texting, tweeting, and being part of the conversation. 855-REAL-JOE, 855-732-5563. Let's get right back to it because I don't want to waste any of his time. David Fisher joins us, CEO of Landmark Capital. He joins us every week to give us an idea of what's going on in the markets, give us an idea of what's going on with your money. And listen, it doesn't matter how much money you have or don't have. You need to learn how to be safe with your dollars, how to be safe with your finances so you can take care of your family if I'm not going to say when because I'm not an expert, if things go sideways. You got to have a few bucks to be able to stand back on so we don't have the same major issues we had back in 08 and 09. David, thanks for being with me. And we were talking about, Trump kind of flip-flopping. I don't even know what that is. Flip-flopping, though, on his economic promises.
I think, I'm going to be a little bit hard on President Trump. A president should know what a strong dollar versus a weak dollar has on effects on the economy. That's a pretty simple thing as a president, and especially one who's been in business. So he should know these things, but he's totally flip-flopped on his belief and his announcements of the value of the dollar. In his election campaign and post-election, before he was inaugurated, he was touting how strong of a dollar we got to have. We're the country of the world. It's all about America, making America great, and we have to have the strongest currency in the world. That was his rhetoric. Okay. Yesterday, he was talking about how we need to have a weak dollar and how the president, for the most part, has said we got to have a strong dollar.
But everybody says our money needs to be strong. Why is that bad?
When the dollar is strong and other currencies are going down, we sell less to other countries because our currency is more expensive for those countries to buy our products, our goods and services, which means it's harder for the stock market to go up because they're buying products that we sell in U.S. stocks. So this is why you don't want to have a strong dollar at all times. We're going to move into what I'm going to say is a currency war. In other words, every currency wants to go down. Remember, President Trump used to accuse China of manipulating the currency when he first got elected. Yeah. And when he was campaigning, China was just trying to stimulate business and their economy by having a lower currency. Now we're doing the same thing, and President Trump wants a weaker dollar because the dollar's gone down since January of this year by index about 10.5%. It's at 92 points is what the dollar at. It was 102 at the peak in January. They're now saying, currency traders are saying the dollar is going to go down the next 16 to 24 months down to about 72 by index, which is a major support level. And it's a crisis of the dollar, was what has been said previously in 2006. This caused gold to rally. So this is why gold is going up. And if you look at the Dow and gold, guess the difference year to date, how much gold versus the Dow, what's the difference in a percentage?
I don't know.
Because everybody's talking about how the great rally we're having in the Dow. Okay. There's only 0.2% difference between the uptick of gold and the uptick of the Dow. The Dow has moved up 9.8% year to date, and gold has moved up 9.6% year to date. So there's not a whole lot of difference, and gold historically moves more in the last 6 months of the year than the previous 6 months of the year, and that's happened 37 out of 41 years, year after year. And we'll talk more about the movement of gold, but what's happening is, back to President Trump, unfortunately, flip-flopping. When President Trump was campaigning, he was saying how Yellen should be ashamed. This is his quote. Yellen should be ashamed of her actions, is what he said during his campaign. Yesterday, he changed gears and he said the chief central bank officer has done a good job, quote unquote. So Janet Yellen hasn't changed anything she said, except for the Fed said one thing for months and months and months, that they're going to raise interest rates and lower their balance sheet. Then they did that, and then the markets went down, and then she flip-flopped saying we might not do that, but we're still on task to do that. So she's gone back and forth. But, really nothing's changed from the Fed, Janet Yellen's standpoint. And President Trump is just learning, that you just can't bash everything all the time. And as far as tax cuts versus tax reform, the media is wondering if he really knows the difference. Tax reform is saying, okay, let's take away something that we've been charging you taxes on, and let's reform that. And in doing so, you'll pay less tax. Therefore, you have more money. Less will come to the Treasury, but you have more money to spend. So therefore, the economy will go up. And therefore, when the economy goes up, more money exchanges hands. So there's more taxes that actually come back to the Treasury. So the Treasury didn't lose anything. It's a wash. People save more money and make more money. That's a wash. And that's called tax reform. Tax cut is when you just say, okay, taxes are too high. They're at 30%. Let's cut them down to 15%. That's tax a cut. And this is what they're trying to pass a bill for, and also do tax reform.
But David, he's got Steve Mnuchin there with him. He's got people around him that also should be telling him this or enlightening him, if you would, correct? Or did they not know, you think?
I think Steve Mnuchin is I don't like his ethics, but I think he's a brilliant man when it comes to understanding this.
Okay.
But unfortunately, now we're finding out more than ever, a lot of the president's people that are surrounding him, when they challenge him and tell him, do say this, don't say that, he listens, he takes it in, and usually he might follow their advice only for a very day or two, and then he's back to his own agenda, and the way he speaks causes more challenges for his administration. So, and I'm not bashing President Trump today. He still has my support, but I'm just saying, let's look at what's happening here. And, he's facing a lot of things that a lot of presidents haven't faced before, and he's trying to do a lot more than most presidents have done before, but he still has his own challenges with his own inner self that he's operating as the presidency from a businessman New York style, where you just kind of push people around. It doesn't work that way in the United States in Congress. And so he's having to change. I don't think he's going to change. And this is why we're going to have a lot of problems in getting things done, unfortunately. And that's why he's doing some flip-flopping. I think you're going to see a lot more areas of flip-flopping. It creates uncertainties. It doesn't create stability in leadership in the White House. Look at how many people have left or been fired recently just in the last couple of weeks,
Yeah, but you know what? I'm not sticking up for him either. But frankly, some of those people should have never been hired. You know what I'm saying?
I agree with you.
Okay.
I agree with you. So, so we need to pray for our president. There's a learning curve he's going through, and it's a fairly large one, unfortunately, that he's going through because he doesn't have a lot of experience being in the politician side of things. And he needs to change in some of the behavior and the things he says. I'm not saying he needs to change policy. I'm saying how he delivers the message needs to be a little bit more different than what he's been operating on. And I think we'll get a lot more things done.
When you look at everything, when you look at everything that he has come in, and I'm not trying to say that everything he's doing is right. I don't mean that by any stretch of the imagination. But when you look at some of the things that he's been fighting, he has not had the ability or the platform or the slate, however you want to say it, to be able to get in there and just focus and concentrate on his job. I mean, he's being fought from within. He's being fought from without. And I believe even given misinformation at times. But that's, it's my own personal opinion on this thing. So we've got to go. We're going to come up on a break here. But when we come back, I want to talk about the over the last few months. Every week we've got a prominent investor on Wall Street. The hedge fund managers are giving a warning that a correction is imminent. You've talked about this. You've talked about this plenty of times on how the market has to correct itself at some point in time. So let's scare the bejesus out of everybody on the way. I'm just kidding. When we come back, let's give them some information on what's happening with the markets. You really do have to be informed. You really do have to have the information you need. I tease David on a regular basis about he sells gold and silver and what have you. He does precious metals, but he has a good grasp on stocks. He has good grasp on the economy. And I don't know how many of you do. I know some people read and they try to get their information, but you know what? You really have to talk to somebody who's in it every day. I'm Joe Messina, your host. David Fish will be back with us on the other side of the break. We'll be right back.
Did you know that 9 countries around the world have already seized their citizens' assets to pay down their country's debt or support their banking system, known as what we call a bail-in? Did you know that bonds, mutual funds, and cash can be easily seized, while certain types of gold and silver coins historically are protected from government confiscation? Would you like to know the laws that have been passed to seize your wealth and how to protect your hard-earned money? Did you know that the Dodd-Frank Act allows our government to do the same type of seizure on our investments that those other 9 countries have already done with their citizens? If you don't want the government to seize your assets, you need to know how to protect yourself. You need to call our friends at Landmark Capital today. They are waging war against the government seizure of your wealth. Call 855-747-5947. That's 855-747-5947 to get free info or landmarkgold.com.
Everyone loves liberty. Our rights come from God, not from the government. So why are you letting other people tell you what's best for your health care? Joe Messina here, host of the Real Side Radio Show. I'm asking you to exercise your freedom with Liberty Health Share. Liberty Health Share is a community of people who voluntarily share one another's medical costs. Liberty Health Share is founded on the idea that most people truly want to help one another. Healthcare sharing allows members to do just that. It's a true community that support one another in times of need. Liberty believes people should make decisions for themselves and their families. Members are able to take back the freedom to make their own decisions about their health care. Freedom from guilt or doubt about how your money is used. You have the freedom to direct your health care, not to be dictated by bureaucrats. Stop letting others tell you what to do and join a community of like-minded people. Exercise your freedom. Join Liberty Health Share and take back the control of your health care while helping those around you. Call us at 855-58-LIBERTY. That's 855-58-LIBERTY for more information, or check us online at libertyhealthshare.org. That's libertyhealthshare.org.
J&M Enterprises is a full-service screen printing company. They print on shirts, pants, hats, cups, frisbees, sports bags, sweatshirts, tote bags, and most any other promotional items. J&M has been family-owned and operated for over 25 years. J&M takes pride in providing high-quality products and services because we care. Our state-of-the-art equipment enables us to print high volume with superior quality on any job. We print on clothing lines for schools, businesses, sports teams, and bands nationwide. Our team is committed to total customer satisfaction and the quality you should expect from a professional screen printing company. J&M, family-owned and operated. Give us a call. We guarantee a great product and a great price. 800-462-0002. For a price quote, 800-468-0002. Or go to the web at www.jnm.cc.
You want answers! I want the truth! You can't handle the truth!
We are back. This is the Real Side on GCN Live. Always a pleasure to have you with me. I appreciate the time that you spent with me on the air, in the chat room, texting, tweeting, and being part of the conversation. 855-REAL-JOE, 855-732-5563. Let's get right back into it because I don't want you to miss a second of what David has to say. As I said, we're back with David Fisher, the CEO of Landmark Capital. Always enjoy when he's on with me. I learned so much when he's on the show. I shocked you in the last segment when I knew that NASDAQ was for tech, and I learned that with you while you were on the show. So I do pay attention and listen from time to time. I take notes. So, David, thanks for being with me today.
Absolutely, Joe.
We were going to talk about over the last couple of months, every week we've got, Wall Street investors, the hedge fund managers and what have you, giving a warning that a correction is like imminent. But you've been saying this for a long time, but what my argument's always been is that since I've been doing the show now, coming up on 10 years, I keep hearing how the market's going to crash, everything's going to bottom out, there's going to be anarchy in the streets. So what's going to really happen, David?
No, that's not happening.
Right.
I'm never be an extremist on anything when it comes to financial matters, and I'm not on any of that. We have some major fundamental issues that are being ignored, called our debt. But this, in reference to the stock market, I'm not a doomsdayer. This Chicken Little type of a person. A lot of people in my industry are. I'm not calling for a market crash. Others who are in the market or talk about the market are actually using those terms that are pro-stock, but are changing their tune. And this new trend started to become very vocal about 9 weeks ago, maybe 10 almost. I think we're going to have a correction. It's not a matter of if, and most investors who are been doing this some time believe and feel that the correction is imminent. Nobody can say how much or when, and neither can I. But what I can say is this: people who have never talked about a correction before for quite a few years, a decade, are coming out, very prominent people. And every week now we're seeing more people say this. The numbers are growing every week. Used to be only 1 or 2. Now it's half a dozen, but I'm not going to mention all half a dozen. I'll mention a couple here. Seth Klarman, he's a legendary investor. He's calling for a warning of a 1987 black market type of a crash. Wow. He's a founder of Bupas Group. His track record is probably one of the greatest in investment history, over 30 years plus of years, from 1982 to 2015. He only had 3 losing years. So think about that. 3 losing years out of 30 plus years.
Wow.
That's pretty phenomenal.
Yeah.
He averaged 16% returns. The national average is 7. So he's more than double of that. And while he did this, he had 30 to 50% of his hedge fund in cash at all times. So that's pretty astonishing record. So when he says something, people pay attention. He said earlier this week, he said the fact that this market could propel, he's talking about how traders are investing right now. There's hundreds of billions, I'll back up, there's hundreds of billions of dollars, Joe, he's citing, that are now being traded not by traders, but automatic computers who are doing what we call automatic triggering.
Right.
So they're not trading on sound judgment, but just algorithms and flow of momentum of trades. So there's no humanization in this. It's just all technical base and flow of money. Those are what's leading most of the market, he is saying, to these higher levels. And that's not a good fundamental, because all it takes is one trader, one computer to start the sell order, and others computers see the trend and they do the same. And he says, and the fact of that could propel a market crash once the snowball starts running down the hill. So he's calling, be careful, because that's kind of what started Black Monday, that environment. The market, it works great, he says, when it's rallying, but what happens when those same automatic systems get hit with sell orders, and some of them are $500 billion in capital, and real amount is even larger as many of these funds are leveraged, hit the sell button, you're going to have a 1987, he says, all over. Wow. He says that it could get pretty ugly. So very well-respected man, another one who's always in the news, chief economic advisor for Allianz, Mohammed El-Iran. He used to be CEO of PIMCO before PIMCO decided to change their name. But he said in his recent article, he raises serious doubts about the sustainability of the bull market in stocks. And he cites the actual reason that the previous person I was talking about, Seth Klarman, said. And then a third one is a foreign investment group, the largest in Singapore, manages $354 billion in assets. They're a sovereign wealth fund. And they're warning that the valuations are stretched and policy uncertainty is at high, and investors are being too complacent. So that's how their most recent report that happened on Sunday. So there's a lot of people within the United States, outside of the United States, now coming to the table and saying, just be careful. Don't put all your eggs in one basket. It's not operating on sound fundamentals right now.
So, David, how does somebody who doesn't have, mega million bucks know what to do with their money? What would you tell, as I always like to say to you, the average Joe, the guy that's working 9 to 5, he's putting a few bucks away here and there, what have you. He's looking at what's going on around him, saying, "Okay, how do I protect my money? How do I protect my assets?" What does he need to do?
Obviously, diversification is the key, and I'm going to give 2 ideas here. One, if you're in a 401k and you can't roll that over into precious metals or a portion of that, and we have clients that fall in that category, and we tell them that they won't allow it, and there's certain criteria you have to meet, and we can help people understand that. But if they're stuck and they're only allowed to be in stocks, then what I would recommend is be very careful riding this high wave of the tech rally, because it's showing signs of the tech bubble that we saw happen in 2000. And it got nasty back then. It collapsed. And so, a lot of people made a lot of money on the run up, but when the turn happened, you couldn't get out fast enough. So economists are saying, get into emerging markets. What are those? Foreign markets, undervalued markets that are mainstream. And you can just Google it, emerging markets, and you can learn a little bit about that. I can't give, buy this stock or buy this index advice, but, diversify. Don't have all your there was a survey that was done that most Americans believe only they should have most of their money in American indexes because they're not familiar with other ones. Well, get familiar with other ones, because when the American index pops and you have all your money in it, that's not called diversification. So get into some other areas, emerging markets, foreign markets, that Russia's market is, and I'm not for Russia. Russia's market I would stay away from, not because of what's going on with us and Russia, but their market's getting clobbered from January till now. But there's some Chinese markets, some Asian markets, some European markets that are probably very healthy and are undervalued compared to where the U.S. stock market is. But if you have access to roll over your 401k or IRA, or you have funds outside of those retirements, you should be purchasing some gold, because gold, at the end of the day, I don't think people care too much what the investment is, where they're investing in Apple or Google or gold or whatever the investment is. They don't look at that once they sell. They look at what their dollar value says in their account. And I think we're going to outperform the stock market the next 6 months, because we're facing some major, major things that we'll probably talk about coming up after the break. One specifically is the debt ceiling. And that's going to cause a whole lot of problems for the market, in most people's opinion. And Steve Mnuchin's been talking about that as of yesterday. He came out and gave a big speech. There's been some meetings that have happened behind closed doors. So diversification is always the key. It saved people a great heartache in 2008 if they had some money in cash, they had some money in gold, they had some money in stocks, and some money in real estate. But unfortunately, the news media has led us to believe put all your money in U.S. indexes, and that's not a healthy recipe for financial growth.
It's funny you should say that, because real estate, you hear information all over the place as to what you should do with real estate and where real estate's going to be. And some areas are talking about another major bubble. So as I promised you, this is the extended podcast, and I know some of you hate that term, but here's the deal. We only have so much time during segments on terrestrial radio. So I love bringing David and others back to give you a more in-depth, more detailed interview, if you would, give you the information you need to actually succeed. Now, David is the CEO of Landmark Capital, and Landmark Capital, he's been around. David, you've been around I don't mean like physically been around, but you've been around the gold world over 20 years, correct?
25 years last month.
25? My God, you must be using your high school picture in that promo.
I look younger than I am.
No,
my wife's can give her
the
accolades
credit
for that.
Yeah,
Yep.
well, there you go. So anyway, you've been around a long time. It's not like you just started gold during the boom here. And so you really have an understanding about precious metals. You have an understanding how this actually works. I'm always intrigued. Some of the questions I get are a couple of things. I forgot to tell you about this before, but you're a smart guy. I'm sure you can work this through. One of the questions they always ask me, and I know I'm going to screw it up, but you sell numismatic. You sell a special kind of coin. Say what it is.
We sell all markets.
Yeah.
Because we don't hold the inventory, I don't have to recommend a certain market.
Right.
We sell bullion products, bars and coins. American Eagles, Canadian Maple Leafs are bullion products, and lots of others, 30 from around the world. We sell low-grade investments, which are a numismatic product. We sell investment-grade coins, which are a numismatic product. What we typically don't sell is rare coins because those are risky and speculative. But if somebody's looking for a rare coin, because I work with the largest wholesaler in the world and I talk to the vice president of that company, I have a pretty strong relationship. I can probably find any coin that if somebody's looking for a certain rare coin, we can help those out with that too.
Okay, so and the question along those lines they always say is, well, it's a very, if you want to sell the coins back to them, they charge you high. Now, they didn't say this about your company in particular, but most of those companies charge high exorbitant fees to buy the coins back. Would you explain how that works so they can get a warm fuzzy, if you would?
Well, most of the companies in my industry make money when they sell a product. So that's how the whole industry works. Most of the other companies make fees an additional way, which we don't. When you sell back metals, they make revenue that way. We don't. And some companies are charging for literature. In fact, I ran across a company the other day. It's a fairly young company that actually charges $14.99. And they have a whole bunch of different podcasts.
Oh, God, really?
You click, yeah, really. I was laughing too. I go, that's surprising. So they had like 20 different podcasts up there, on the normal topics that we talk about every week, Joe, that I educate for free on as a, public service to whoever wants to learn. They're charging, for education, and so that's a new growing trend. So we don't do any of that, obviously, and that's why, a lot of people come to us and get advice and education. We disclose upside potential, short-term downside risks, their benefits, their drawbacks, and we create a thing called a financial blueprint, which is a tailor-made interactive conversation with each individual investors on how the markets operate, what they do, what they don't do, and so they can make a very wise decision for themselves what market is best for them, and then we facilitate that. So we're quite a bit different from most of the industry. Most of the industry does make funds those three different ways. We don't, only the one way, which is normal, and our spreads are much lower than most of the industry. So that's why a lot of people find value in working with our company.
Well, and it is a question. It's really funny because I love speaking to you about this stuff. I don't think of some of these questions. You and I know I've asked you this during the normal segments, but the other question on the average that I get probably after every one of our every one of our segments is, so gold and stocks, and you talked about it in the show today, but I don't know how to phrase the question. When you compare the two on a regular basis, does gold consistently outperform the stock market? I guess is the question.
There's no such thing as, does stocks consistently outperform gold? No. Does gold do the opposite for stocks? No. There's nothing. If markets were consistent, then they'd be predictable. But markets fluctuate.
That's right. No, you're right.
And environments dictate markets based upon supply and demand and volumes of money moving into the markets, which is dictated, completely on what the Fed doesn't do, economic environments, which are ever changing. But you got to look at some trends. What completely really is the underlying movement of gold upward is, the debt. And we saw that happen in the last 16 years where we had gold triple in value, while stocks during that period of time didn't triple in value. So gold, there's times when gold does outperform stocks. And we saw the same thing happening in the 70s when we had inflation. And then there was times when gold didn't outperform the stocks from 1980 to 2001, almost a 21-year period of time. So gold is like a light switch. It either is on or off, and the switch is turned on in January, and the light is going to heat up even more brighter as time goes on because we're dealing with a debt problem that we just haven't addressed back way when we should have in 2008.
Now, as far as gold, and again, you and I keep joking with you, and I go, gold, why does gold sustain? Why is it such a big deal? It's that shiny thing that everybody wants. I mean, it's only valuable because people really want it, and it's almost like you've created a hype around it. But China has bought a significant amount of gold in the past, and are they continuing down that road? Is that something they're still doing today, and why?
Well, there is a lot of hype out there about gold from gold companies, but the hype is not the driving force behind gold, and it's certainly not the small investor. It is central banks that are the driving force behind gold. And central banks, China being one of 10, is the largest buyer of gold. And they are on a mission to have a lot of gold to back their currency called the yuan so that they can compete with the U.S. dollar. They think in terms of legacies, decades. We think in terms of Americans as the next couple months. And unfortunately, this is working against us because if we were concerned what's going to happen next decade, we already would have taken care of our debt structure for the next decade. But we're passing an enormous amount of debt onto the next generation if we even make it there before a major correction. So this is why China is buying gold. Ironically, in 2005, China announced for the first time that they wanted 1,000 tons of gold in the next 5 years. They hit that target in 2010. They had 1,087 tons. The next year, in 2011, Joe, they said they wanted 10,000 tons in the next decade, which would be 2021. Here we're at 2017, and some reports say that they have around 4,000 tons of gold. So they're not quite half there. I think they're going to make it. They're on a very strong movement to do this. The flip side of this, in 2005, they had somewhere around 7.8 to 8.1 trillion U.S. dollars in treasuries. Currently, they have somewhere around 3.8 to 4.2 trillion dollars in treasuries. They've sold half of their treasuries, and they're buying gold with it. For the most part, they're using that money for that. So they're backing away from being the largest owner in treasuries. They used to be that. Now the Fed is the largest owner in treasuries. The last 5 years, they've taken that platform. So we're facing a problem where the world is backing away from treasuries, buying gold. They see and when central banks do this, Joe, they're sending a signal. They're saying something in the future is going to happen not so good to America. So this is what really drives gold. They see this down the road, that America, in its inability to take care of what's happening currently in their debt structure, they're just ignoring it, and they feel something is going to happen rather major because there's never been a currency that's survived, that's gone off a gold standard more than 40 years, and we were on our 44th year right now, Joe.
I just want to be clear with people. This is not a doom and gloom. We're trying to scare the bejesus out of you. That's not what's going on here, okay?
No, not at all.
Right.
Let's put it in perspective.
Yeah.
The dollar's not going away.
Right.
The pound, British pound, used to be the central currency of the world. It didn't go away. The British pound is still around. It's just not traded internationally in the central banking system used as the currency of the world reserve. So they shrunk, and they lost that status. That is where we're going in the United States. I know it's hard to believe, but it'd be just like if we were back in Roman times, Joe, and we were talking about how Rome's going to fall, and people would look at us like, you're crazy. What planet did you come from? You know, Rome is all roads lead to Rome. Well, not all roads lead to Rome anymore, because Rome didn't get their financial house in order, and that's what caused that and their socialistic behavior that said we got to take care of everybody, which costs money. That's what was the fall of Rome, plus, you know, some moral issues. But they didn't take care of what they should have been taking care of, the financial structure in Rome. And it was the thing that broke the straw that broke the camel's back. And so we're not taking care of it. We should learn from history. This is how nations fall, and we're going on the same road that other countries have gone before us.
No question about it. So the the other question that you and I have had, I know we've talked about this off and on in the past, is how high will gold go, do you think? What about those guys that say gold is going to go to $900 or below? Now, I don't know enough to even guess at that, but I would imagine, do we know what it costs to even mine gold at this point?
Well, the same people where they on either bookend of the spectrum, there's some people are saying gold's going to 5,000. I've heard people say gold going to 10,000, and then there's people on the other end that's saying gold's going to drop below 1,000 and 900. And Harry Drent is one of them. I'm not throwing stones at Harry, but he's been ultimately wrong. He said this is going to happen 2 years ago. He was totally wrong.
I am amazed. Look, I don't want you to throw stones at him either, but I am amazed at how many people follow that man. I am amazed at how many people talk about him, follow him, whatever. And I keep saying to myself, who else would you follow that keeps giving you wrong? I mean, if your doctor kept doing surgeries on you and giving you wrong information, would you keep going to that doctor? Go ahead.
It's a human behavior. People like sensation, and there's I don't know if it's a genetic thing or certain people just like the extreme measures. The person that's Jim Rickards says gold's going to $5,000 and people follow him. I don't have that characteristic. I don't run my company with that business model. We don't say sensational things based upon huge market fluctuations. You've never heard me say gold's going to quadruple or silver is going to $200 by the end of the year and all those nonsensical things, because I don't want to lose my integrity when it doesn't happen. And so, but there's a lot of people that's how they operate, because when you look at the people that say those things, they're not in the gold market, never have been. They don't own a gold company, never have. But what do? They sell books, tapes, and give seminars and speeches. And if you don't say sensational things, nobody's going to attend your seminars to buy your books and tapes. So it's a rhetoric and a business model that it probably works for them. They get a following, they get recognition, because maybe at one point in time they were right about some market, but for the most part, when it talks about gold, they're completely wrong, and they're really doing a disservice to the industry. Gold is not going to drop down to 900. Because the mining cost of gold, according to the World Gold Council, is somewhere between $1,050 and $1,410. The high-low number and the average is around $1,225. So if you start looking at that and start creating and putting it against what the technical side is, $1,225 is a major support level in gold, and $1,050 is the bottom of gold. So if anybody owned a gold mine, are you going to mine gold at a guaranteed loss? Probably not, and neither will they. So this is why you're not going to see gold, even in a massive recession, go down to $900, because the mining cost 20 years ago used to be $250. It's costing more to mine gold because we have to go deeper in the earth, and wages are going up. We have to pay people more. So people that say this insane number of gold going to 900 or 800 or 700 or crashing are just going to be as wrong as the people that say 5,000 to 10,000. But somewhere in the middle is the norm, and gold should move somewhere around 10 to 12% a year. I've seen it move as much as 72% in 2008. I think we're going to have some bigger movements, not small movements, but I'd rather have consistent movements than these far-fetched numbers.
Well, I mean, today when we're doing the podcast today, I think gold is $1,200 and some odd dollars an ounce.
$1,272.
Right? Okay, and I remember, you've been on the show with me when gold has been as high as $1,800. So there's been some fluctuation in gold, and that's just history. That's just life in the gold world, is it not?
Yeah, that's life in every world.
Right.
When the Dow, let's go through history here for a second. When gold was at 252, the Wall Street Journal came out and said, "Sell your gold. It's lost its lackluster." That was the very bottom of gold in 1999, and we started to move up from there. When gold hit $500, all kinds of articles came out and said, it will never breach its previous high of 850. Sell your gold while it's high now. It went through 850, and people said, this is the top for gold. Sell gold. Get out of it. It'll never breach the $1,000 mark. It's a psychological barrier. It'll never happen. It hit 1,000, and it created some resistance. They were right. It blew through 1,000, obviously. But when it went to 1,200, they said $1,500 gold is impossible. It blew through $1,500 gold. In fact, when it was at 1,500, it went from 1,500 to 1,905, which is the peak of gold, very quickly in the matter of 4 months. And that's because our government was shutting down, fighting over a debt ceiling. Sound familiar, which is what's getting ready to happen again. But then it went up too high compared to the mining cost of gold, because the mining cost of gold when gold was 1905, Joe, was about $700. So the relationship was too high. Our mining cost of gold is actually $1,410 is the high for the mining cost of gold. So we're under the mining cost of gold, or the high number, and above the $1,050 for the low number. So we're right in the middle of the mining cost of gold. And as time goes on, gold will go up just because of the mining cost. But the same thing goes for the Dow. When the Dow was 13,000 and it corrected down to 6,600 in 2009, it wasn't the end for the Dow. It was the bottom of the Dow. We're at the top of the Dow now at 22,000 points. So it has a high, but the whole idea is buy low, sell high. This is why you diversify into gold. Gold is going to go high, and it's going to break the 1905 level. It was pushed down and manipulated, and Deutsche Bank was fined millions of dollars, and a few others. We've done a previous segment on that.
Yep.
They were found guilty. They're probably not going to play that game again, because now it's all out in the open how they did this. So they're not going to manipulate the gold market.
Yeah.
But they did it back in 2012.
Oh, you're a very trusting man. I mean, seriously, when I hear about these banks being hit with, hundreds of millions of dollars in fines, and then they do the same thing again, you go, wow. I mean, it's just amazing. They must be making so much money hand over fist that a couple $100 million here and there is not a big deal. Just it consistently blows my mind. But let's shift gears a little bit today, right? So the European Union announced over the weekend that it would be considering, or it is considering, freezing bank accounts. Now, you've kind of talked about this in the past. This sounds a little crazy. Why would they do this? And really, why do we care? It's Europe. They're crazy anyway.
Well, they're crazy. Can you imagine if America, the Fed says, hey, we're going to seize your money in your bank account for X amount of days? That would not go too well. It was, and this came out in European press, but they're considering new measures that would allow them to temporarily stop people from withdrawing money from their accounts to prevent a bank run. And this is Reuters, mainstream international news reporting this. This is not some nutball saying this. So, they've had some previous bank runs, one in Banco Popular earlier this year, which has said we better wake up and create a new policy. Currently, Joe, in place, the EU has a policy, a plan that has been approved that can suspend your money for 2 days. Once you go to pull it out, they can hold on to your money for 2 days. What they want to do is the EU is now seeing, here's my take on it, the EU is seeing that the banking industry is not as sound as it should be. Evidence why there was bank runs recently and a couple of big banks that got bailed out in Italy. They're wanting to extend that 2 days to 5 days, and then there's one segment of this new plan that actually wants to block withdrawals for a maximum of 20 days under what they call exceptional circumstances. So let me just clarify. I think this. If we have a bank run in Europe, I think they're going to call that an exceptional circumstance.
No.
So let's be real here, I wasn't born yesterday. So it is disheartening to move from a current 2-day suspension for payouts to a 20 days suspension. It just confirms things are not as rosy as we would like it. Why is this important to us? Simple. Where do you think we got the bail-in blueprint? It came from Europe. In fact, the FDIC and the Bank of England drafted the blueprint for the bail-in on a white paper that they can find out on FDIC.gov. I got the blueprint. I've read through it. And the first paragraph, called the executive summary, goes over the Dodd-Frank bill and how they can seize your money. So what happens in Europe when it comes to seizure of money, we've learned from and taken that and ran with it and created the same thing here. My fear is that we might get some wild idea. The Fed, who is upside down in their balance sheet, might need to implement some similar policies in our banking system. That is not a good thing because it says we don't have free markets.
You know what? Apparently what happens in Europe doesn't stay in Europe, especially when it comes to finances, But and again, why do we care? Why do we watch the European market? Why do we, you talked about Deutsche Bank. Why did we care? I mean, I know how you like to really get into detail, but just give people an overview. I'm Frank Jones. I'm driving down the street, and I'm an electrician. I've got a 9-to-5 job, so to speak, and all I want to do is put food on the table and take care of my family. Why do I care about this European stuff?
Well, it's simple. When Britain decided to exit the European Union, the Dow during a short period of time dropped 1,500 points. That caused trillions of dollars to be lost in markets, in that caused 401ks to go down. Now, since then, they've recovered. But what happens in Europe doesn't, as you said, it doesn't stay in Europe. We live in a global society. When Asia gets a cold, we sneeze, it affects the markets. So if we see something of this magnitude where we have a major banking problem going on in Europe, which there is, and they can't contain it, fix it, in other words, it is going to affect the United States markets, and it will probably cause us to impose similar regulations. So we're not immune from what goes on across the pond. We're tied into them, just like they were tied into us when what happened in our markets with Lehman Brothers and Bear Stearns going under. It affected the whole world. So it's a tit for tat. Even though we're a much bigger economy, the bigger they are, the harder they fall, especially when we don't have our banking system found on fundamental practices, and we don't. Banks are leveraging money today more than they were in 2008 before the crash.
So when things like this happen and there's uncertainty in the market, basically card rates could go up, my mortgage rates could go up. It just affects me in a whole bunch of little ways, correct?
Oh, well, you're bringing up something else. Steve Mnuchin with the debt ceiling. If we don't fix this, credit card rates will go up. If they don't raise the debt ceiling by September 29th, Joe, we're going to default for the first time in the history. This is Steve Mnuchin saying this, the Secretary of Treasury, yesterday. He met with both houses, parts of our country, Mitch McConnell and Chuck Schumer, Democrats and Republican majority leaders, and trying to search for ways to raise the debt ceiling. They didn't have any progress. We have 12 days of working days where Congress will get a chance to come and look at this in the first week of September after they come from their vacation. And he has previously warned, Steve Mnuchin, this is not enough time to raise the debt ceiling. Congress hasn't even come together on this. It's not even on their agenda. Democrats want to have a bill that will not raise the debt ceiling if their plan to create a very large tax cut, which is what Republicans want. They want a huge tax cut. So they're at odds right now. So this is the first time where we don't have a lot of agreement going on in the largest time in history, and we're approaching the most critical time in history where a budget has to be passed, a debt ceiling has to be raised, and they're wanting to have a tax law passed to create tax cut. So it's all coming down to the wire at the same period of time, and they have 12 days to pass it. And now for the first time, the Secretary of Treasury is saying if they don't raise the debt ceiling, the government will default for the first time in history. This will cause havoc in the market. Interest rates will surge up, which will cause credit cards to go up. He's the one that's saying this because he's been very politely, starting back in March, saying, you guys got to talk about this. You guys got to talk about it. There's been no congressional meetings so far in a joint venture to even have this on the agenda. It's insane. It's the most insane thing I could probably ever say on your radio. This does not make any sense that they're not even talking about the most critical issue that could bring America to its knees this time. And I'm not a Chicken Little. This is Steve Mnuchin saying this needs to be done.
Well, I hear you. I got it.
So this is why you got to diversify, invest in gold, because the last time this came close, we got a credit downgrading by Moody's, and gold and silver rallied over 40% in 3.5 months.
Always exciting. I mean, and I'm not making light of it, but it's just politics has gotten so much, and partisan politics, let's just be honest about it, from both sides, has gotten so much in the way of what goes on in this country. It's sad. It really is sad. Our founding fathers are going, we died for what? I mean, seriously. Anyhow, let's talk about some giveaways you got going on to my listeners, and just my. No, I'm just kidding. Some of the ways that my listeners can call, get information, and maybe take advantage of some of the offers that you have.
Well, we believe in helping people, educating them, but also creating incentive for them to be educated and take advantage of the markets. So we have 2 free giveaways, Joe, on your program. If you invest $25,000 or greater, either through an IRA or 401k rollover, or you do this outside of the retirement, and you do that trade by September 29th, so this gives them time to call our company, get an information packet, get their questions answered, and they're going to have a few of them, and up a plan, see if this is for them or not. But if they do that, they're going to receive not only their metals of the $25,000 or whatever they invested of that trade, but they're going to receive 10 free ounces of silver along with that metals that they purchased $25,000 or greater. So that's the first giveaway. The second one is, it's kind of a give us your opinion, but also we want to help you learn too. If they go to Landmark Capital, either our website at landmarkgold.com or call us at our number, which is 844-715-7311. And if they go to the website and they enter in for the sign up for the newsletter, which is their comments on what they think owning precious metals would benefit them, how it is important to them, they're going to be entered into a free drawing of 10 free silver ounces of gold, ounces of silver, 10 free ounces of silver. Let me clarify that. And the drawing will take place live on your radio program during the week of August 14th.
Oh, cool. And so I'll have my family, relatives, friends, and Tammy do about 60 or 70 different entries. Oh, I'm just kidding.
One entry per person.
Hey, I'll just spell my name 12 different ways. I don't know what to tell you. Anyway.
But they can enter into both contests, though. They can be a part of both contests, obviously.
I always appreciate the time that I spend with you, David, and I really do appreciate, I've not got one person send me an email that say that they've had a negative, conversation, felt pressured when they called to get information, that kind of thing. Actually, it's funny. I get more pushback on me pushing them to go to the website and do a little reading and do a little learning first than I do when they actually do call and get information from you. But I always appreciate your time, your honesty, and the way you break things down. I mean, seriously, I appreciate that you break things down in plain, simple English. I don't have to go looking things up in the financial dictionary to understand what you're saying. So, always a pleasure.
Thank you for having me, and God bless America, and God bless your listeners.
Thank you. So, David, tell people where they can find Landmark Capital.
They can go to our website at landmarkgold.com, or they can call us the traditional way at 844-715-7311. And for your dad listening, that's 844-715-7311.
I'm Joe Messina, your host. A lot more coming up at the top of the hour, and I've got a surprise. I told you who's going to be on tonight. For you old folks, if you didn't write it down, you're not going to know. So you got to come back and find out who's with us. I'm Joe Messina, your host. You're listening to The Real Side on GCN Live. We'll be back in just a couple of minutes.
Meeting is adjourned. Oh, I am sorry, sir. I didn't mean to overstep my bounds. You say that.
What?
Meeting is adjourned.
It is?
No, you say that, Governor.
What?
Meeting is adjourned.
It is?
If you're a pro, you know that this is not efficient, because you know there's a better way. There's also a better way to save. When pro customers buy building supplies in bulk at Lowe's, they save up to 20% every day. Buy in bulk and save up to 20% on concrete, gypsum, and gypsum accessories. At Lowe's, buy more, save more. Visit the Pro Desk or Lowe'sForPros.com for details. Discount applies to contractor pack items. Minimum purchase required, U.S. only.